Hey, everybody. Good morning from Brooklyn, New York City. Um, Hello and welcome to the Biotech Capital Compass. Today, we're looking back at the first half of 2025, a 6-month stretch that saw biotech sentiment swing from cautious optimism to institutional apathy, with a few dead cat bounces and political plot twists thrown in for good measure. Now, we conclude at the end of this podcast that with a tumultuous 6 months behind us, biotech is still here, and aspects of the biotech firmament are thriving, i.e., large caps, increasing usage of in silico drug development methods, and disease spaces. Now, with second quarter and third quarter earnings being cyclically strong for large cap and profitable biotech companies, of which, by the way, increasingly there's more and more. The medical conference season still being meaty, and biotech M&A is staying steady. There are tailwinds for biotech in the second half of 2025. We really believe that. And most of the headwinds, regulatory, scarce capital, tariffs, most favored nation type pricing, are now known concerns. So we have visibility there, which we did not have at the beginning of the year. So really, all of the concerns are more visible. And now in the second half of the year, seasonally speaking, tends to be very strong for biotech. So, we think the unknowns going forward should have a positive slant, which we believe makes the setup more favorable going to the second half of 2025. We have had a rough first half of the year, so let's get going looking at that. Now, if you spent the first half of the year wondering whether biotech was broken or just taking a nap, you're not alone. Let's walk through what happened month by month, unpack what it might mean for the rest of the year. Now, by the way, if you're looking for a deeper dive, check out our latest Biotech Capital Compass newsletter, Biotech in the First Half of 2025, Caught Between Hope and Havoc. We published that on July the 7th. It's behind a paywall. This is not. This video will keep free for everybody. And we appreciate your support for our research analysis through a subscription. It would be really nice to get that support as we try to educate people on biotech and hopefully help you invest in the sector and invest profitably. So to make sense of a turbulent start to the year, we took a month-by-month look at the biotech sector's performance across the first half of 2025, analyzing sentiment shifts, market signals, institutional focus. We used the SPDR S&P Biotech ETF, or as it's called colloquially, the XBI, as our sector benchmark. We tracked price action, headline flow, and investor reaction using Bloomberg as our data source. For broader context, we compared biotech's trajectory to the iShares Biotechnology ETF, called the IBB for short, the Spider SPDR S&P 500 ETF, called the SPY for short, and the iShares Russell 2000 ETF, or the IWM for short. This offers a lens into how biotech stacked up against large cap, small cap, and defensively positioned peers. So let's look at it month by month, which we did, by the way, in our deeper dive in the newsletter we published about 2 days ago. Let's start with January. Was it a false start or tactical bottom? Biotech entered 2025 off a dismal 2024. XBI was barely up last year, a meager 1% return against a booming 23% for the S&P 500. So in January, delivered a modest positive 2.9% for the XBI. Investors called it a relief rally. Technicals flashed both danger and opportunity. The death cross mid-month in January warned of further downside, but dip buyers and JP Morgan, it's a healthcare conference in San Francisco in the middle part of January, happens every year. There are actually many other conferences that occur around the JP Morgan healthcare conference, about 4 or 5, but it's colloquially referred to as the JP Morgan Healthcare Conference in San Francisco, and always happens in the beginning to about the middle part of January. So, with JP Morgan M&A headlines around the middle part of January 2025 brought just enough energy to hold things together. Retail remained hesitant in January. So the takeaway, tactical upside, but no firm conviction. In February, we had a narrative divergence. February looked constructive on the surface, M&A headlines, regulatory momentum, and analyst optimism. But price action told another story. The XBI fell 4.3%, negative 4.3%, and trailed nearly every index. Policy noise picked up, NIH cuts, RFK Jr. rhetoric, whispers for revived pharma tariffs. Retail sentiment wobbled, and even strong FDA headlines failed to support biotech tickers. So investors began asking whether biotech was losing its narrative to macro and to politics. Um, uh, and in March, the bottom essentially fell out. March was a breaking point. The XBI dropped 8.6% to new 52-week lows. The resignation of Dr. Peter Marks from the FDA's biologics division set off alarm bells, with his departure framed as a protest against political interference. We actually did a video podcast with an FDA expert who had worked at the FDA and various companies and is a policy expert also about a month ago. And she called Dr. Peter Marks as almost like a CEO. Of part of one big, very division with the FDA. So when the CEO resigns, that is a big red flag to investors. And that's kind of like what happened with investors looking at the FDA. The headlines were brutal. Resignations, anti-vaccine conspiracy theories, and analyst downgrades dominated the month. Even large cap IBB underperformed. Institutional credibility became the story. Investors began to wonder whether the FDA was becoming unpredictable at the exact moment when biotech needed stability. So in April, was it a rebound or a reflex? April brought modest relief. XBI bounced 2.3% positive, plus 2.3, slightly outperforming the SPY and the IWM, but volume was muted and the tone stayed cautious. Dr. Peter Marks' exit still casts a long shadow. The investment bank Bernstein warned of a 20% decline in FDA approvals. President Trump reignited tariff headlines. Retail showed up in spots, meme tickers, orphan drug headlines, but institutions mostly watched from the sidelines. Nobody was calling a bot. Most were simply happy that things weren't getting worse in April. In May, we call it the confidence trap. The month began with a bounce attempt. XBI reclaimed its 50-day moving average intraday. It didn't hold. By month's end, the ETF had dropped another 4.5%, negative 4.5%. The big news, Dr. Vinay Prasad, known for his skepticism of accelerated approvals, was appointed to lead the FDA's CBER division, as the biologics division. Cell and gene therapy stocks wobbled. Twitter lit up. Institutional interest stayed flat. So May felt like the most difficult, disappointing month of the year, a brief rally in April followed by retreat and resignation. In June, was it rotation or just reversion? The XBI closed up 4.7%, so a strong end to the first half, roughly tracking the SPI and the IWM. Was it a rotation into biotech? Probably not exactly. Macro lifted all boats. The FDA narrative went quiet. Retail re-engaged briefly, and M&A whispers resurfaced. Still, the XBI remained below its 200-day moving average. So really, it felt more like a relief rally than a reversal. But at least biotech was back in the conversation. The reason for this podcast, the reason I got, quote unquote, a job. So what is the positioning for the second half of 2025? Heading into the back half of the year, investors face a few what I call known unknowns. These were really big unknowns at the beginning part of the year, but through the first half and the volatility in the first half, being stuck between hope and havoc, these unknowns became known. The FDA remained under scrutiny. Prasad's leadership style, RFK's Jr.'s rhetoric could shape regulatory tone. Summer liquidity tends to be thin. Volatility could rise in small catalysts. This is also something that's sort of well known in biotech. M&A chatter is cheap. Execution will matter more than headlines. Yes, that is what a lot of people say. M&A happens once in a while. Execution matters all the time, especially in biotech, small to mid-cap biotech. And ETF flows are fickle. If retail pulls back again, XBI could revisit lows. So these are all what I call known unknowns. But there are tailwinds to biotech in the second half of 2025, and these should not be underestimated. These are almost all sort of like unknowns because nobody's really talking about them. But we, Biotech Capital Compass, are highlighting for you, the hopefully astute investor or the person who's beginning to really get to know biotech. While the people who populate biotech are weary, I will say that, being one of those folks, market commentators, for example, at Stifel Investment Banking, have recently noted a resilient and positive vibe at investor conferences. I've noticed this also myself in talking to people across the biotech firmament. The second quarter and third quarter earnings period is seasonally strong for biotech and biopharma in general. We expect large caps and profitable biotech companies, of which they're increasingly more and more, to benefit. We'll write on this more in the next few days, talking about how second and third quarter tends to be strong for biopharma companies and provides a fill-up for the entire biotech sector and biopharma in general. As the regulatory and presidential noise abates, a lot of the concerns, there, but most of the hit to sentiment is likely behind us. I mean, these are what I call known unknowns. We already know what these are. And most likely the worst is behind us. Hopefully, keeping both those fingers crossed. Actually, you can't see it, but my toes also. The medical conference season is still growing strong. We expect more focus on science, clinical data, and positive regulatory updates. Most biotech companies are at various investor conferences have been unequivocally indicating that FDA is engaged and deadlines are being met. This is really for the most part. When I say most part, I mean, I would guess over 90%. I've reviewed a lot of transcript, looked at a lot of companies' presentations, both at earnings calls and investor conferences. And literally, the vast majority of them are saying that the FDA is very interactive. Deadlines are being met. Yes, more work is being required. There is more back and forth. But in general, the doom and gloom that seems to be out there in media and more on social media doesn't really seem to be affecting biotech management teams who keep executing, and the FDA and various regulators worldwide keep delivering. Now, M&A like today's Merck confirmation of the $10 billion Verona buyout should continue. A lot of larger companies have said they want to do bolt-ons, and they're liking, there are a lot of companies right now in the biopharma world that would be good bolt-ons for biotech companies. We had vetted Verona a few years ago while at an investment bank and think the Merck purchase is a smart one. So for traders, the 200-day moving average, XBI ETF average, remains a technical battleground. For now, hope and short covering aren't substitutes for institutional support. So that's really what we need to see. We need to see more institutional support. We keeping a sharp eye on that. And let's see, maybe the second half of the year, we might get some or at least more off that. So in closing, that's the story so far. A sector wrestling with regulatory uncertainty, political volatility, and shifting capital flows. The first half gave us drama, some technical setups, and little in the way of resolution. We'll be watching the second half for signs of real change or just more movement without progress. Thanks for tuning into the Biotech Capital Compass. See you next time. Have a good day, everybody.